Hey everybody, welcome to Trading Capital's market analysis video. Today we'll be discussing all of the sectors. I'll be going over the XLF, XLE, XLE, XLB, XLI, XLP, the utilities, XLU, XLV, real estate, XLRE, XLY, XLK, XLC, the Dow Jones transportation, and XBD. Just basically covering all the major sectors of the S&P 500. Reason being, we are getting a new weekly candle formation. So starting off with the XLF here, the financials, you can see that we're into major resistance. We've had a beautiful 1, 2, 3, 4 week surge. You can argue this fifth was a beautiful reversal surge. So 5 weeks of continued momentum to the upside. That does put you in a bit of an overbought state in the short term, especially when you look at this weekly volume count. It's very, very pathetic in the sense that it's extremely light. There wasn't much buying pressure going on. That being said, once we do get into the sell pressure, it should be very, very fierce. And if you look at this wide range red bar, it's going to take a lot more volume than this to get through that, considering that this is a major level in the sand where you had a massive breakdown. Now the interesting thing is that you are closing above the 25-day short-term weekly moving average, so that is showing a little bit relative strength in the overall market. But overall, you have this major pivot zone over here, tons of resistance up here, and you can see you have this down sloping parallel channel that will act as resistance as well. So in the short term, I do think there's a potential pullback. If we discuss the XLE is testing its 25 weekly moving average, and you can argue this is a bear flag, inside bar bear flag. So as long as you consolidate inside of this wide range red bar, which it is on high volume as well, 244 on the week, 244 million on the week, this does stand to suggest that it's going to take a lot of consolidation to try to break up, but this technically is inside bar bearish consolidation. So we could see some chop in and around this channel before ultimately breaking down on the next leg lower. You can see that we are chopping above this parallel channel, which we were trading in. So that is naturally going to act as support when you confluence on that line over there. But inevitably, I do think you break down at some point to test this 56 level, which will be our next major level of support. If we take a look at the XLB has had a beautiful, or almost picture perfect retrace. Maybe by the end of today it will have a retrace back to this original trend line, which was your breakdown zone of this kind of choppy topping formation. And it may just so happen to coincide with a technical gap fill at that 81 level. So overall, I still think the material sector is going to have a massive mean reversion. You did trigger this topping formation, which does suggest you have at least another 25% downside, which I think you'd go back to your pre-COVID levels once the recession takes hold of this market. If we take a look at the XLI, so the industrials have actually been pretty strong. Relatively, they are one of the stronger sectors in the indexes. You can see that you're trying to test and capture this 50 weekly moving average. So that is nonetheless bullish in the short term. But the fact is that you have had an extensive move off of the lows on a weekly time count starting to form, which could potentially run out next week. But overall, again, massive resistance. This is kind of where you broke down on the charts, but you can see you are trading back with inside of this channel. So the big question is, next week, will we confirm inside this channel on a weekly basis, or will we break down? That's the big question around that. If we look at the consumer staples XLP, I think XLP are kind of running into a little bit of trouble here. You can see these weekly wick formations forming. You are again capturing that relative strength to the upside, being the fact that you're above the weekly 50 and the weekly 25 days. So it is one of the more stronger sectors, known as the defensive sector in times of fragility and nervousness and poor market sentiment. But overall, the market sentiment has increased to the bullish side lately, so I do think we're going to start to see that sentiment change, and that should put pressure on the consumer staples. Overall, the consumer staples, I think you have some minor support here at 65, intermediate at these pivot highs over here, and then overall your major level will be down here around 61. These levels can change based off of the rate of change in the price action. So whenever you analyze a level or watch a video, never ever assume that level is valid, 3 or 4 or 5 weeks from that specific date. Rate of change is a very, very important concept. Overall, if we look at this trend line here, you have recaptured this trend line, but you have not confirmed above the original breakdown trend line. So that's going to be some interesting price action next week to see if we can get some confirmation above it. If not, then it's likely we will start to test the lower range of that channel. Utilities are interesting. So utilities are interesting for a simple fact that this is where the SPY topped and started its down leg in April 29, 2022. It was a harsh sell-off on the SPY. Roughly from that date, the SPY basically dropped and had a drop all the way down of 21%. So when the utilities were near in a top over here, basically the utilities topped 2 days after the S&P topped. So noticing the correlation that the utilities are very, very close to a major resistance points does suggest that once again we are precisely close to a near interim top in the S&P 500, which should correlate with a potential top in utilities. And the interesting thing is typically utilities are more defensive in nature, and we've seen kind of a risk on and a risk off rally at the same time. So it's very interesting to note. But keep this in mind that the S&P topped 2 days before utilities, and utilities are running into massive resistance. If we take a look at XLV, the XLV has filled a key technical gap here. On the daily chart, if we flip on the daily chart, it was a key technical gap that was filled, and now you've run into resistance. So on the weekly chart, again, there is relative strength in the healthcare sector, but I still think you've confirmed a breakdown by closing on a weekly basis below this important trend line if we were adjusted over there. So I do think you have confirmed the breakdown. It's only a matter of time before healthcare continues to see more downside. Once again, you are into massive levels of volume. You can just see these candle spikes in volume, which started your inevitable sell-off to the downside. Is going to be an extremely tough area for the markets to chew through that volume, especially when it's so light right now. So I do think we're going to have to see an increase of volume if the bulls want to send this price action to the upside. But overall, I still in the camp that you see further downside ahead. The real estate sector is interesting because you're now sandwiched between the key short-term moving averages. So you have the 25 and the 50. You haven't quite got a retrace back to the original breakdown zone, but you can see that it's very close. You have filled a key weekly gap over here. So that is something positive to note for the price action. But overall, there's not much that's keeping this price action up here in my opinion. You can also see that you have a downsloping trend line over here that is just slightly above the current price action around 46, but tons of resistance up ahead. The common theme for all the indices and sectors is tons and tons of resistance. And I really don't think that with the recent push up in yields, the markets haven't really priced in, especially the real estate sector, has not priced in that additional push up in my opinion. So let's take a look at the XLY, which is consumer discretionary. Very cool technical chart. You can see that you've had a near perfect retrace on the weekly chart back to your major pivot here, your pivot bounce, your level of support before you broke down, and now you've come up to retrace this level. Again, you're sandwiched between the two short-term moving averages, but tons and tons of resistance up ahead. Simply noting this candle formation over here, this little red bar had 82 million, and I mean you're trading only 15 million this week, a little bit more by the end of 31 million. So if you were to basically encompass all of these last 4 weeks, you know, you just barely squeak by basically 1 week's worth of volume. So tons and tons of resistance. You're not going to be able to chew through 82 million shares, certainly when you're doing not even half of the volume per week. Let's take a look at the XLK. XLK technology has shown a little bit of relative strength. You have confirmed above the short-term 25-day moving average, but wedged now underneath the 50-day weekly moving average. You have achieved a 50% retrace from the high to the low, so technically this is the area where markets will either make that final push up, maybe to a 618 retrace, or this will be the key level before they start rolling over to the downside. And I just think due to the light volume nature, summer doldrums, the markets have had that opportunity to float up in the short term. If we look at communications, communications are the weak sector. So if we look at the XLC, the markets have had a terrific bounce, but this sector is trading below the 25 moving average. So that is therefore the weakest sector in the S&P 500, and clearly in a massive downtrend. Not one that you want to start acquiring, in the sense that even though it is technically the weakest, which could imply a further bounce, it's very difficult when the market conditions are deteriorating to pick on weak sectors and expect them to get a bounce in comparison to the overall markets. The Dow Jones is very important at a critical level, in my opinion. It's testing the weekly 50 moving average. It'll be interesting to see at the end of the day if we close. And I'm doing this video very early because I have some other commitments later in the day. But overall, testing the 50 weekly moving average, you are trading slightly above this parallel channel, which was keeping the Dow in check, since basically 87. You had a pivot to a kiss to a pivot high to another pivot low to another kiss to pivot high, center point of the COVID sell-off. And look where you're trading. You're now trading basically right on top of this major long-term parallel channel. So you have found some support, but nonetheless you are at a very strong resistance level noted by this downsloping parallel channel. I do think it's only a moment of time before the Dow Jones starts to make its next leg lower, or even start to consolidate, because it certainly needs to consolidate this recent up move if it stands a chance to move higher. Now the broker dealers are also very interesting, because you've had this beautiful rounding topping formation, which had a test point at this trend line. You had a bounce, and then you rolled back over, broke this level of support with conviction, had 1, 2, 3, 4, 5 weeks of straight downside, found a technical bounce, another sell-off, and now you've come up, put in a terrific effortless bounce, had 1, 2, 3, 4, 5, 6 here on a weekly time count right into the original breakdown zone trend line on a weekly basis, and you have a major pivot high. So this is clearly a massive level. Since you're at a major pivot, you've retraced back to the breakdown zone, which is over here, and you're at the 618 retrace of this pivot high to this pivot low. So tons of resistance on the XBD. Believe it or not, the SPY actually topped basically the same day as the broker dealer. So that's kind of what we're looking for again. And if the SPY topped on the same day as the broker dealers, this could potentially be the high in the broker dealers. And if you look at the S&P 500, you topped potentially yesterday, and you're getting a very solid retrace. We'll touch base on that. Let's actually bring up the SPY right now. So the SPY chart has found resistance at this pivot high, and you're getting a natural retrace off of this reversal candle. So the XBD is actually putting in a potential top today, and the SPY put in a potential top tomorrow. So that's very close in nature, and typically those two will confirm together along with a couple other sectors and indices, and that's something we just have to really keep an eye on, because if you see certain sectors starting to break down, naturally that's going to pull the S&P 500 down as well. Pretty much all the sectors had a meaningful bounce together, so therefore the leading ones that topped first should be our short-term leading indicator that a potential top is near, and that's certainly what the broker dealers are potentially telling us, being the fact that you hit this retrace zone, you potentially are putting in a little bit of a reversal candle over here, a topping tail, which is interesting because you did put in a topping tail here on August 8th, which has been followed by a beautiful retrace right into that resistance zone, the 618 retrace, as well as this pivot pierce, and now the game is on. If we get a reversal signal here, it's very likely that in the short term we have found a potential top for the indices. So let's take a look at the QQQ, discuss that for a second. So the QQQ, again, is into resistance on the weekly chart, major pivot. You are closing above the 25-day weekly moving average, but let's just see if we can find any interesting trend lines. So this trend line over here, where depending on how you draw it, if you use the closing weekly low over here, or if you simply drag it to the pivot, the major pivot zone over here before you had a bounce reversal, you can see, let me just remove these two, you can see that you're into tons of resistance on a weekly basis here. Simply if we analyze the daily also really depicts that very similar picture. You're filled a key technical gap yesterday. You have tons of resistance at that trend line. You're trying to confirm a breakout out of this downsloping parallel channel, but you have not been able to do so. So clearly tons of resistance there on the NASDAQ. IWM is interesting. I'm very close to potentially shorting it. Reason being is if you look on the weekly chart, let's just take a look at this. Sorry, it was the daily chart. And where is the 200? The 200-day moving average, you're just kissing that again today. You've had a near full retrace of the daily topping tail, and I don't think you're really going to get through that level, especially on the anemic volume that there is today. Let's take a look at the weekly just to see how we're doing. Look at this powerful move on the Russell. You've had 1, 2, 3, 4 weeks of upside. You could test this original breakdown zone over here, which would coincide with your weekly 50-day moving average, as well as the 50% retrace. So the interesting thing is the Russell has not retraced 50% of the move, as opposed to the S&P has retraced 50% of the move. So that is just interesting to note. Despite the Russell showing more relative strength in the short term by making bigger moves, it really hasn't recaptured 50% of the losses as opposed to the S&P has. So that's it for today. I hope all this analysis helps. We did cut a few trades a little bit early, like DBA, just because, I do expect the markets to head lower in the short term. But overall, everybody have a great weekend. Thanks again for being members. Please give this video a big like down below, and we'll stay tuned for more price action. Options X does start next week, as well as a whole host of European GDP data. So that data could be really interesting in the sense that it sets the tone for what the likely picture is for the European economy, and I certainly think they're going into some sort of a massive deep recession that will obviously have contagion, in my opinion, for all of the global markets. So that being said, let's stay nimble, and we'll just see what next week has in store on the charts and be ready for a potentially more of a better trading week, where this week was extremely light volume, not many powerful moves up and down, despite us catching a few on. It's been a pretty lackluster day today with the markets just doing a general float up on